Listed property accounts for almost 4% of the total market cap of the JSE. Anton de Goede is portfolio manager at Coronation, who joins us now. Anton, are you guys as excited about this listing as it appears as though Mornay thinks everybody else is?
Alec, I do think that the listing does provide something different for the sector. Management has proven their skills over the last few years, creating value out of the existing portfolio as well as development pipeline, and therefore I think it's a listing that one should consider.
They're highly rated, the Atterbury guys, aren't they?
Quite correct. As I said, they've created value and they've shown their skills over the last few years through different cycles. So in positive times and in negative times. So they are quite highly rated.
And not lacking ambition.
I think you need ambition within the property sector because that's the way that you create value.
What was interesting going through the details of this business, nice name as well, Attack, is the way they've moved into Africa. Starting with Mauritius, I guess that investment there at the Bagatelle Centre is something that is already starting to reap rewards.
I think Africa provides investors of an interesting angle. It's not the first fund listed on the JSE property sector that has some Africa exposure. You've got High Prop, which they're partnering with, as well as Resilient. Rockcastle is another listing on the JSE that has some African exposure. So I think it's something that will come through. But one needs to be, quite careful in how you look at Africa, ex-South Africa, especially when it comes to your rental income stream, and if you're actually getting a dollar income stream or you're getting a local currency income stream, because you've got the risk with that as well.
What is the percentage of non-South African revenues generated by Attack?
Well, Attack is looking eventually at about 30% of the assets outside of South Africa, and some of that within Europe and some of that within Africa, ex-South Africa.
I guess the difference about this company as well is that it has got a shareholder base, a strong shareholder base, Sanlam 18%, Royal Bafokeng 13%. So it isn't one of these cobbled together new property listings.
Yeah, I think if you look at what the company did, a month or two ago, they did come to the market, or they did go to their shareholder base of a rights issue, and that was a rights issue that was oversubscribed. So they've got a shareholder base that's been supportive over the last few years. So they're not really desperate in that sense to come to the market for capital, and that does make a difference, that the shareholder base at the East continues to support them.
Anton, how important is the waterfall project to this company?
I think it's very important, not only for the company as value creation, but also I think for property investors in general in Johannesburg and Pretoria. I think Waterfall City will create a different node as an alternative to nodes like Sandton, like Woodlands, like Centurion, even like Sandton, like Menlyn, and therefore the value that they can create out of the development pipeline there, will be huge.
So it's almost like creating a new city in a way, or a bit like a Melrose Arch?
I would compare it more to a Century City, Canal Walk in Cape Town, and I think it will even be much bigger on scale than Century City.
And the risk?
Well, there's also always risk with property development, but I think that management has shown in the past that they can manage those risks and that they secure tenants before they actually start any development. Anton,
to be a little skeptical now, they're coming to the market at this point in time. Property's had a good run. If you're putting yourself into their shoes, why the timing?
If you look at the potential build-out at Waterfall City and their investor base, at one or other time they would require substantial capital for Waterfall City, and I think it's coming to the market now and creating the additional shareholder base for the eventuality of the additional capital when they may require it in 18-24 months' time. And I think secondly, because they come to the market as a NAV play rather than an income play, the fact that bond yields have been quite low for a long time shouldn't really play a role in why the company is coming to the market now. I think it's more a result of their development cycle.
All right, so we don't have to worry about this perhaps being mining the market at the opportune moment.
No, I think the volatility that we've seen over the last 3 or 4 months within the sector should have actually scared them coming to the market and said, all right, let's rather not come to the market because we've seen a lot of volatility within the sector, and they still continue to come to the market. So I don't think that's really the main reason behind it.
The other project that Morné Wilkins spoke to Lindsay about earlier was in Newtown, Johannesburg, 75,000 square meters. That's substantial.
Yes.
Do you have any feeling on how that's going?
Well, that's not only retail, that's part retail and part office, and Nedbank is going in with them with that development. The Nedbank will be a substantial office user within that node, and I think they've got a good pre-let already on some of the retail there, and we all know that CBDs in general in South Africa, retail remains strong within CBDs, and something a bit more formalized should be able to attract the feet and get the returns that the retailers want.
CBDs, including Johannesburg's?
Well, I think if you just walk in the streets of Johannesburg, you can see that there is a footfall that needs to shop, and that people actually need to shop where they work and not necessarily shop where they stay, especially when it comes to the CBD type shopper. And therefore, creating retail for them there should be good.